Hi guys. I hope Lishapu and yeah, well, welcome to another episode. I want us to go through VIX 75. We went through it about 3 days ago, and then I showed you what I thought was gonna happen from the time when we did the analysis. The price was still around there, and if you're new here, make sure that you subscribe and then you hit the bell icon because this the videos that I share here. I just want to help you guys. I just want to sort of share ways in which I think it's easier for you to go about when you're doing your market analysis. So in this video, we're just gonna have a look at how the our analysis or the setup played about, and then we will continue assessing and see if we can't get trades from where we are now. So this is what I said in the initial assessment 3 days ago, or the analysis.
Here we had what? Close below, right? I want you to see this. Yes, here the market closed below, right? But after closing below, what did it do? We had what we call bullish engulfing. And this bullish engulfing is still around this. We understand we took it out, but they're still around there. So they closed below, but now they are allowing the bulls to still come in and swallow all the price action from their previous day. That's when you had the engulfing. But the engulfing resulted in a move that went up. It went up, and the highest it reached was that. Now, during that point, you need to ask yourself, during the time when the bulls were engulfing and going up there, what did they achieve? What did they achieve? Did they break any trend line? Did they break any area of resistance? For us to say, it seems like they allowed them to close outside, but they're still trying to defend. In this case, we just had this. We just had the engulfing. We went up like that, but we never took out anything, which is what it's scary because of what on this time frame your nearest area of resistance is around here. This is your daily resistance, and then your daily support. You can just look back. It's not so important right now. So the daily support, you can take this one. This is the daily support. This is the daily resistance. So because of us having the engulfing alone, but it's not taking out anything, and the trend line, you can still keep it there even on this one. So because of that, we can end up seeing the sellers pushing down to this, which is why I'm saying this here that you're trying to do here can be very dangerous.
Now that you saw how it played out, when we did the analysis, the price was still around here. It was still around there. It was still around this place. And I did make it very clear that, yes, you do have your trend line and it's holding and you are hitting the nearest area of support. But this thing has got higher chances of what? Being broken. And I gave reasons why. So make sure that you stay with me throughout so that I can take you through, the reasons why I said that based on how the structure looked like, this had a higher chances of being broken, right? So we're gonna go through that, and then we will make a new analysis based on the current price, or to say that now that we are here, what is it that we feel like it's most likely gonna happen from here? Okay, because when we were doing the analysis, I'm just gonna go back and show you. When we were doing the analysis, it's just that it's not appearing nicely. When we were doing the analysis, the trend line was here, right? And someone could have went in there and bought. And you could have done that, but I told you that based on the current structure at the time, it was not a good idea for you to do that. Basically, simply because even on daily, because remember this is H4, even on daily, the type of candlesticks that we are getting, because we were here, the type of candlesticks, this type of bearish candlesticks or the bearish rejection candlesticks, they were telling us that there's too much bearish force. There's too much bearish force on what? On daily, because we're seeing there's long tails above and the body is below. So that shows that someone is pushing down. And because of that, I said, because of this force that we're seeing on daily, that trend line that you saw on H4, it had higher chances of being broken. And look what the price did. It just went past that. You see, which is why when I'm doing my analysis, I'm always, I always tell you about making sure that when you do your analysis, you always start at the top to just check how is the bigger structure. Because sometimes if you didn't check daily and you just went straight to your H4, you will go there and find your trend line, and then the price is here. You'll want to buy, because this is the only image you have to say that the market looks like this. You didn't check it on a different time frame, which is why it's not a good idea. If you check the daily is higher than H4, and daily is talking about bearish falls to the downside, then you would have seen that no, if I try and buy now, it might not be a good idea. And that's exactly what I told you, to say that I'm warning you guys, if you think of taking a trade from this, make sure that you are very careful, because this thing has got higher chances of what? Of being broken. So that's how it played out. So it was another success. You can see it pushed it down. So this is what I teach. This is what even the guys that joined the mentorship, and we just started now, this is what I'm going to teach them. They must have reasoning. You mustn't just say, I'm buying here because we're hitting a trend line. That can never be enough. It can never be enough. Because the day it works, you are happy. But if it fails, what more do you have to back up your decision to take a buy? Because I can't just trade using a trend line. Or I can't just say because we're entering an area of support, then automatically this has to bounce and go up. And then every time we hit a support, I'm buying. I cannot go like that. You must have reasons. You must have more reasons to say, based on this structure, this is what I'm saying, that. Then when I put all of them together, this is the conclusion that I come with, which is the same thing that I'm always showing on this channel. I start at the top, I tell you what is happening on that bigger time frame. I move down, I tell you what's happening there, until we get to the smaller time frames where you'll be searching for trades to say that, oh, this is now what we have on H1 if you're trading H1, or if you're trading H4. This is what we have. And we remember on weekly we saw this, on daily we saw this. Both of them are pointing to the upside. So meaning if I was to get a trade on my H1 that's pointing to the upside, at least I know I've got what? A backup from the bigger structures, because I don't want to find myself in a situation where the price is inside a weekly resistance. It's just testing a very fresh weekly resistance, and I'm looking for trades to go long or to buy on my smaller time frames. Because of what? If you just go with that H1, you'll see the price dropping, and then you're like, what's happening? This is my support. Why is it breaking my support? Because what? It's reacting from a bigger time frame structure. If you have checked the other time frame, the bigger time frame, you will see that no, based on the location that we are at now, we are at the resistance on higher time frame. So there's higher chances of the price feeling the hit from this resistance and reversing, which means if I'm trying to take a trade on a smaller time frame, the best way would be getting trades to the downside. That's what I want. That's what I teach. So let's do a new assessment now, or analysis. And we can't just look at daily here and then we say we have this and then we predict something like this. I always see there are guys who do stuff like this. Some of them, they've got big names. They're there on the Instagram and stuff, but the stuff that they say or stuff that they teach their students, it's not impressive at all. Because you can't just give me a chart that looks like this and then you put a circle and then you put an arrow pointing to the upside. How is that going to help me? Because a prediction alone without an assessment, it's not going to help me. You giving your student a chart and then you say, here, this is what I think is going to happen, but you don't give me reasons why. This alone, it's not enough. It's not enough. But okay, it is what it is. That's why I'm not on Instagram, because the stuff that's being posted there, I'm not happy at all. So let's start at the top. We always start at the top when we're doing our analysis. And remember, this is still our monthly bullish trend line. It hasn't changed, still the same, because remember the structure on monthly takes a very long time to change. So here what we have is still the same as what we got on the other 3 days ago when we did the initial assessment. We still have the same trend line, right? So this being the trend line, and we are still at the area of support on the same time frame, which is our monthly. And someone can say the trend line is broken, but according to what I teach, according to how I learned this stuff, how the person that taught me, how he taught me, he said this is not a breakout. And I've been using it over and over again. It's very efficient, and it's very, it's something that you can use. You'll be profitable for as long as you follow the rules, for as long as you do the same thing over and over again. There are those people, when you get the price coming here, they'll be saying there's a breakout and then they continue selling. Yes, sometimes it's gonna work, but now if we were to have if I ask you to reason, why would you buy here and put a stop loss there? What did you use for you to say I'm gonna put my stop loss here? Because the idea of a stop loss is that when you're placing a stop loss, it needs to be placed at an area where the price is going to struggle to pass or to reach, which is why when you're taking a sell at the top, the aim is just to put it above, because the logic, or we're saying, because the last time the price came here, it failed to reach whatever price that I have up there. So even now when I'm trying to sell, I'm just hoping that whatever that forced it to go down here, it will still serve as a force to the downside, so that the price can struggle to get to my stop loss. So I can't take like a sell here, put a stop loss here, but the price could reach this. It was here not so long ago. So what makes you think that it's gonna struggle to go back there? You see, that's what I teach. That is what I teach. So here we can just conclude by saying you are at the bullish trend line and an area of support. And again, you need to mention that when the price came to the support for the first time and trend line for the first time, which was this point, we looked for trades to go long. If you've been on this channel, there's a video where we were talking about this, predicting that you're gonna get look for reaction there and go up, and we did get trades. It went up, right? And remember, the support, we always mark the area of resistance above to say that when I'm taking a trade from support, the idea is that the price will be trying to reach for the next area, which is what resistance. In this case, we did have like a long candlestick here, which is the one that pushed the price from the monthly support to the monthly area of resistance. It got there and then it got rejected. Now it's coming back again. So you need to understand that when the price came here, this is what I said in the previous video that I posted 3 days ago. When the price comes here, when it came here, it collected some of the buying orders, right? So remember, this is how trading works. You've got buy orders here. The price, when it gets, is going to collect some of them. They are going to be filled, or all of them, and then the price is going to go up. That force or that power from the buy orders that were placed there, that area of support, they're going to be filled, pushing the price to the upside. So when the price is coming for the second time, you'll find that there are no orders anymore, or they're there but they're very few, not enough to push the price up, and then they end up being consumed, and then the price moves to the downside. That's the comment that I made here not last week, 3 days, 4 days ago, to say that here, this was the first touch. The first touch is the one that collects more orders. So which is why a zone or a trend line, let's give an example with a zone, area of support. If this is where the support was formed, right, and then the price comes back, you are trying to take a buy. This is the first retest of the zone. It goes up. The first one is always the strongest. It always collects more orders. So which is why the more it is tested, the weaker it gets. It can end up not having any orders to collect and consume the level. Go with that logic. The same thing here. We tested the first, which is why we always targeting the first touch. If it's not the first touch, we need to have confirmation before we can enter. So here, this collected the orders. And then the comment I made was that because this is not the first time the price is coming to this level, you will find that the first touch took most of the orders, and then the second touch might have to go a bit deeper to collect maybe the orders left here, or it might even consume it and go to the next level, which is fresh. When it comes here, it will be collecting fresh orders. It has never been here before after creating the zone, which means this will be like the first touch that we got here. And we know the first touch has got higher chances of working out because of what? It's going to find all the orders still present there, which is why targeting the first touch is always a good idea. So that's what I said. So that's all that we have on this time frame. We're still playing around the bullish trend line and inside the area of support. Let's go to weekly. On weekly, we do have the same thing, and it's very clear here. This was our weekly area of what? Area of support. It was tested here. So meaning the orders were collected there. So when they were filled, they initially, like they immediately provided the liquidity and pushed the price up, forced it to go up there. When it comes for the second time, most of the orders have been filled. Yes, it can bounce, but now because it's not the first time it's coming here, you need to be careful as like how you're entering. The price it entered that zone, we're still the same, we're still around the same zone. Remember, this is the main zone, and then it formed what? This, which I always show you on this channel, saying that this is what we call a bullish pin bar or bullish rejection candlesticks. But the logic behind the pin bar, remember, I always tell you that when you have it like that, we want the price to convince us more by doing what? By breaking the range. This is what I tell you in almost all the videos that I post. And then in this case, we formed the pin bar. You're saying, oh, the bulls seems like they are reacting. There's still more orders that they're filling. But they didn't continue with that momentum and push up and break the range, but rather the price in the next candlestick came back and broke the range in the opposite direction, which is not a good sign. So that's where you're saying, oh, why are the bulls letting the price or letting the bears dictate the price inside their zone? Because remember, a support is a territory for buyers. So when you hit the support, we expect the bulls to be very strong, to dominate, to protect their zone, and reject the price so that it can go back up. So when we are inside the support, but the sellers are still dictating by pushing the price lower and lower like that, it's not a good sign. The bulls that are here, or the buyers or the buying orders, they're not enough to fill the price and cause it to go up, which is why you can see the fact that the sellers are dictating. That's why I'm saying it's very, very, very risky for you to buy. You need to make sure that when you're buying, you have got like proper confirmation. Yes, you are still inside the area of support. The area of support is still very much holding, so you are not so wrong in searching for trades to go long. You just need to be careful as to like how you are going to enter. So you can't just go in with a limit order in situations like this when the level has been hit before. When the level was hit here, it's coming again for the second time. You can't go in with a limit order, so you need to be careful there. So another thing that you need to note is that this was our low. Now currently we are here, which means we are having a lower low. When we have a lower low, the first thing that we think of is placing a bearish trend line. Then a lower low means bearish trend line. Then that's where you have your bearish trend line, and this is still your support that is currently holding on this time frame, and anywhere around there you can have it as your resistance. So you've got a bearish trend line in place. You've got area of support holding the price on a second touch, and then we have got area of what? Yes, area of resistance. You can see it there. So that's all that you can take from this. If you look for buy trades, yes, you can do that, but you need to be careful with what the bulls are trying to do there. So the price can still do that. So which is why when you're taking your trades, you need to make sure that you are targeting the next opposite structure, so that you don't have to predict that something is going to be broken. You don't know that. Don't have to predict a support is going to be broken. We're just saying, should it be broken? Based on the current structure, it can be broken. We're not saying it will be broken. It can be broken. If it gets broken, it is removed from our chart. It opens more gap to go to that direction, which is why I said on the monthly, I said, should that level be taken out, we've got a higher chance of coming to the next one. So that's what we'll be looking for. So that's all on this time frame. Let's do daily quickly, and then we continue. So on daily, these are the structures that made us think or conclude that the price might end up going to the downside, of which it did here, because we're seeing the tails above showing us that someone is trying to push up, but they're being rejected because the bulls tried. Remember, this is the weekly zone that we said it is not fresh. That's the challenge. We need confirmation before you can go in, right? Look at this. The price entered the zone with a pin bar. It failed to go above the range. That's not a good thing. But rather the price went and closed below. So you're still not convinced. And then it tried another pin bar, failed to go above it. It came and closed, went below it. So it means this one is like they're not there. We're still waiting. And then you can see here it gave you what? It gave you what you call bullish engulfing. Then you say, oh, maybe they are trying to do something. If I'm trading daily, as like executing on daily, I'm saying, oh, maybe the bulls are trying to do something. Look, from there they just move to the side, and then the price is showing bearish rejection candlesticks. Is not a good sign. We ended up defeating the engulfing. So the bulls are not yet very convincing. So usually when you get an engulfing, then we'll wait for maybe the price to take out something, come back, and then we can take it from there, saying that this zone did this and broke that, so that it allows us to say it is strong. Should the price come back to it, we can take it. In this case, we never had anything here. we just did this, played sideways, come here. We can't trust it as yet. If it just did this and failed to go up, it's letting the sellers dictate and do all of this. We're not gonna take a trade from there. So now we're still inside the area of what? The area of support, which is a weekly area of support. So this, remember, this one at the top, I can remove it. It's our weekly trend line. Let's just have the one that belongs to daily, because this is the daily time frame. You can put it like this. You can have it like that. So if this is my daily bearish trend line, and this is my nearest area of resistance, but trying to sell from this now, it's not a good idea because of what? Especially if you're trading higher time frames. You can do it on a smaller time frame. You just need to make sure that when you are setting your trades, your TPs, you also use smaller time frames. You can't execute on M15 and then set a TP using a weekly chart, because you're going to end up interfering with the bigger structures that you didn't plan for. You take your trades on M15, you set your trades there, so that you don't make any mistake to say that I'm going to skip all the areas that are in between on my smaller time frame. I'm going to target the weekly one. It's going to play with your emotions. So that's all that you're having here. Maybe if you're trading this because you're inside the zone, but the zone is not fresh, and you're worried because it's been penetrated more, a pin bar alone here is not going to be enough. Maybe you can wait for a pin bar. They convince you more by going up, breaking this and breaking the trend line. Then you can try and catch something like that. That's what we mean when we're saying you're waiting for confirmation. So that's all that we have on daily. Let's see what's happening on H4. On H4, remember we're here, and then I was like, no, what we saw on daily, no, going up, I don't see it. And then it went down. So let's remove this as our daily trend line. We can even remove the zone, the weekly one, and then just focus on what is happening on H4. So on H4, we did have a couple of lower lows, which means the trend line that we're having on H4 is this one here. So maybe the price, you can see the type of candlesticks that it is forming here, indecision. So the bears are no longer strong. Like, for us to see that the bears are very strong, they need to form candlesticks like this, candlesticks like this, candlestick like this. The moment they allow the bulls to do this, it means whatever that the bears were doing, pushing strongly to the downside, seems like it's coming to an end. Because remember, you are inside bulls territory, which is what? That weekly area of what? Weekly and monthly area of support. But it's too big. The price can still penetrate and move lower inside the zone before taking off. Just because you are inside the weekly zone does not mean you can just weekly support does not mean you can just go to M15 and then start buying. No. The scale difference is too big. So you'll find that this is your H4. The weekly zone is this big. So are you gonna buy here and then place your stop loss this side? You can't do that. Which means, yes, you are in. Just, it's a good thing that you know where you are, so that when you get the structure, change in structure on your smaller time frame, then you can take it knowing very well that the price is inside the higher time frame zone. You see? So we can see that from here, because of where we are. Maybe if the price could do this, then we can mark this and take a buy from there, like that, so that we can hope that the price is going to continue going up like that. But currently, what we're seeing here, it's not enough for us to just go in. So we know where we are. We're just waiting for the price to sort of maybe go outside though, so that we can target. We can hope that it will, pull back and give us something to trade. So let's see what we have on H1. I don't like going to smaller time frames. So at some point, your H1 trend line was here, which means what is important is to know that if you're trading H1, H1 must also be involved in you setting your trade, your TP. You can't trade H1 and then set your TP based on the structure on monthly. No, you're not gonna hold for that long. If you want to hold for long, trade bigger time frames. Otherwise, it's gonna work sometimes, but there'll be a point where the price is giving you so much money, you're holding because you're greedy, only for it to turn and take all that profit, and it's not gonna be nice. So here we can see that this is that the current price action is just a lot here. Maybe let's just wait for the price. If it does this and take out the resistance as well, then the support that did all of that, you can try and buy from it. Without any of the change in the structure on the time frame that you are trading, you don't yet have trades to go long. It's a good thing to search for trades to go long, yes, because of where you are, but we need to wait for the bulls to convince us first, which means we can wait for the structure to change, the trend line to be broken before we can say, oh, it seems like the bulls are still there, let's try and join them. So I think that I'm gonna end it like this. I hope you learned something, guys. This is how I teach. Now I don't complicate things. I make sure that whatever that I explain, it's as simplified as possible. So, and I only teach you the stuff that I feel like if you know them alone, you should be fine. Not to say that this is the only way you can trade. There's a lot of strategies, né? But you need to make sure that the strategy that you choose to go for is what you feel like it's easier for you to learn and understand, and you believe in, because it doesn't help me if, let's say, I'm learning how to trade. I feel like I like, this style of trading, but at the same time, I'm sort of talking about indicators. I've got indicators on my chart. I've got this, I've got that. Those two styles of trading, they don't go together. So you need to pick the one that you're interested in. If you are someone like myself that likes to make decisions based on the candlesticks that I have here, the shapes, the size, the color, and everything, then I'm gonna focus on that only. If someone comes here with an indicator that looks like it's a Valentine's Day, it's a red and it's got this, it has got stars, and not for me, because I don't even know who created it. I want to focus on what I'm seeing here, to say in the past I remember when the price formed these structures, this is how it reacted, which is why when I'm seeing the same structure now, I have a feeling that it's gonna react the same way, which is why I'm entering. That's me. I make decisions based on what I'm seeing, and what I teach, I try to simplify it as far as I can. Is that, to make sure that it's easier for the next person to learn it, which is why even the guys in the comment in this in the mentorship program, these are the types of comments that I'm getting right now. So this is a guy that is in group number 1. So you can see that I don't have to sort of bribe anyone with these are the results and this, the numbers, or me driving a car, and it's not gonna help you. It's not gonna help you. I want you to focus on what I'm teaching you, and based on that, you must be able. I want independence. I'm empowering you guys. I want you to be able to approach the market the same way as I do, and you doing it only one on your own without me. That's why I don't have signal groups, and I'm not gonna open one, because there it's more like me spoon feeding you. But when are you going to learn? Because me just saying buy VIX 75, put a stop loss there, you won't even check the chart. You don't even know what's happening. You'll just go and buy. The day I don't give you a signal, it means your trading stops. That's why I don't have those things. Now I focus on what? Giving you the knowledge so that you can trade on your own. That is what I want. And once I'm done with you, once I'm done teaching the guys in the mentorship group, I want to make sure that everyone is happy. If you just, if you are willing to put in the effort and make sure that what I teach you, you go there and practice, we come back, we continue, you ask questions, we have sessions, you can request a session, we have it, we discuss something. I want to make sure that at the end you are happy. So if you do that, you are more, active like that, then you see that this style of trading is easier to learn and it's effective. That is what I want. At the end, you are the one that comes to me and say thank you, because of what you are happy with what I shared you. Most of you, you will never get it anywhere. There are people that will just, you go there, you pay, but you feel like once you're inside from lesson number 1, you'll be like, no, I don't think it's gonna turn out to be what I expected it to be. Because you are falling for what is on the Instagram. You're falling for just because someone they showed a car. You don't even know. That's not gonna help you. The car is not gonna help you. You don't know how they got it. You don't even know if it's their car. You see? So I'm gonna end it like that, guys. I'll see you in the next video. Yes, I'll try and bring another video. I don't know when, but yeah, this one I'm gonna end it here. Thank you.